Hello all Inderes TV viewers. Kempower reported its third quarter earnings this week, and I have the opportunity to discuss the results with company's CEO Tomi Ristimäki. Hello, Tomi.
Hello, Pauli.
So Kempower's third quarter revenue declined significantly year on year and also slightly compared to the second quarter. So what were the key reasons behind this development?
I think comparing to Q2 and the decline was not that big. So this is basically when we look at that our let's say big orders are almost like 10% of the revenue. So single order moving can cause these small variations, a couple of orders moving. So that I wouldn't look at like statistically very high on there. And but in last year, I think the big difference is, of course, the market situation, what we see with the inventory levels in the key customers. I also read from the let's say social media that, of course, you have to replace it by new customers, but which we have been doing, and that's why the result is where it is. But of course, missing our long-term bigger customers in there because of the inventory situation, which is, by the way, affecting the whole DC charging industry. And this is not only completely Kempower thing, but it's affecting basically the whole charging industry. So this is the main point there.
And you had also some production ramp-up related things going on in third quarter, right?
Yeah, third quarter. I think there was still some delays that we couldn't produce everything, so that affected the revenue still a bit, but now we have also been able to tell that now the ramp-up time is over and we are in full production with the new products to them.
Exactly. Yeah. So looking to the order intakes, there was some decline also. How long would you expect the customers' high inventory levels to keep slowing down the orders?
Looking at the analyze and how the inventory has changed, we expect it to last the first half of 25.
First half, but definitely your new customers kind of.
Yes, this is kind of the effect of the new customers, that they dilute the effect. That when you have customers, especially are coming new to the charging market with big plans, they don't have any stock. And of course, the visibility of ours is towards our own products in the stock. So we don't, of course, see the competitors' equipment in the warehouses. But analyzing the installation speed of the car, how fast it's going, and then estimating, because we have a full visibility on when the products come online in the system.
Yes. So if you take a look to the next year's market situation and your own outlook, what do you see the most important growth drivers for Kempower in 25?
I think it's basically the amount of vehicles is still growing, and what we analyze also is the kind of relation of how good the charging network is compared to the amount of electric vehicles in the market. There is a big gap in certain countries. If we look at the major countries in Europe, the situation is nowhere near to the level we have in Finland today, which is, by the way, the best ratio. I think we are talking of below 20, close to 10 already in Finland, that the network is so strong that there shouldn't be any doubts on can the charging network service the amount of vehicles. But in many countries, the electric vehicle amounts are still growing fast, and the gap could be bigger. We have double-digit electric vehicle growth countries in Europe. If you look at UK, France, registration in the first half was more than 10%. Increase, and we have countries like Denmark with plus 50%. So this is not the same situation as we have in Finland, and it feels sometimes looking at Finnish situation, which is the slowest on EV sales in the whole Europe, and then maybe we get from the home market a wrong understanding on how generally the whole market is developing.
I understand. Then looking to your customer base, could you describe how that has developed over the past 1 to 2 years? And is there, for example, more diversification or?
Geographical diversification, and I would say we've seen the similar tendencies in other countries compared to Finland, that also the retail players are taking in a more active role in the charging industry. And definitely the amount of questions coming to the truck charging networks and comparing that to the plans of truck manufacturing OEMs, these are actually picking up very fast. It's not huge market in a way, but the growth potential, and if the charging network must meet the truck manufacturer's plan on introducing the vehicles, it has to pick up fast to actually being able to service that.
Okay. Do you think the timeline we are talking about a couple of years when that could become actually very much
that is more relevant in a couple of years? Of course, the big numbers, what we are seeing, it's companies are even saying 50% of their sales globally will be battery electric vehicles, and talking about year 2030, and that's only 5 years from now. So it is actually very fast growth and very fast growth targets in the vehicle side, and that actually tells you the demand. Difference in truck charging compared to the personal car charging, that normally the personal car charging is driven by the amount of vehicles. Truck sales do not happen if the charging network is not in place. So actually investments are coming earlier than the huge amount of vehicles. So that's also the difference between the two markets.
Well, then about the passenger EV sales, there's been a lot of discussion about EU's more strict emission limits for the newly sold cars being effective by next year. And this could significantly increase the share of EVs about newly sold cars. So what do you think that your customers, the charging operators, think about this? Do you think that they actually want to see this actually happening, that the EV sales rates increase, or like before they have courage to increase investment? Or
I think this will support the idea, of course. When you have increased number of electric vehicles, then the demand is higher, because people selling electricity, when you have a bigger customer base, it's the same logic as ours, that this will affect and actually affect the need to speed up, because you have the opportunity, and if you are not taking the opportunity, somebody else will take the opportunity. So growing the networks along with the increased number of vehicles, of course, is a key when you want to do successful charging business as a charge point operator.
But is there any skepticism about these EU limits, that do they actually take place and how they affect?
I think we have discussed, I don't like sticks, that I like more carrots, where when you look at the subsidy things, and must is never a good method. This is a little bit, from the personal opinion, of course, the stick is not a good tool. I like the supporting of actually like acquisition of electric vehicles, because that's actually the best boost in the industry you can do. But of course, these kind of stick methods help as well if nothing happens. But that's not good mentality. I think it's especially for the consumer market. People do not like being told what you need to do.
Yeah.
And actually, when you look at the monetary point of view, the bigger impact, and I see truck charging actually going forward, whatever happens, is there's so clear benefits on like the total cost of ownership of the operations. You're running a business and you are affecting very greatly into the biggest cost of running logistic business, which is the energy. And this is actually something that it's so clear economical benefits in there that it makes it kind of interesting, because this is more business decision than feeling.
Yeah. Then about the sales margin, it remained actually pretty strong in third quarter for you, and improved compared to the first half of this year. So should we conclude from this that you haven't at least yet started lowering your prices, at least materially, and even though we could see some price erosion in increased competition in the market, that hasn't happened yet?
But reality is that there is short-term price erosion and more price competition when you have limited amount of projects out there. The situation is different from last year where everybody had room to play. So I would say that, but I don't see that as a like material effect in there. But of course, we are also taking more aggressive position in individual pricing in short term because you want to win the deals what are out there.
And you have a strong starting point when it comes to margins.
I think when you have a margin is in a good shape, then you have actually the room to play in this industry compared to the companies who don't have strong margin to start with.
Yes. Then finally, regarding the competitive situation, have you seen any material changes in your markets with some players winning more market shares or some important players pulling back?
I think it's an overall, there is not huge changes in there, but the huge changes are coming more or less these companies who have ceased to exist on the market. We have a company, Tritium, is now that there was some acquisition that their North American factory was bought by an Indian company, but it also means that it will take time that if they can bring that back. So of course you have gaps in the market when Tritium or EVBox or in North America FreeWire are out from the market. So those are more dramatic changes on the market that will then open the door for others to expand their market share.
So the playoffs have begun and you are still strong in play.
I think it's telling a good story. We have a strong margin. Business, if you look at a little bit longer perspective than last year to this year, I think that's so. I think we will be popping up champagne if the 23 wouldn't have been that high. If you compare to 22, it's more than double to that. So I think Kempower is in good position, good liquidity, strong margins, still sizable business, and it's not, let's say, dramatic situation for us when you're comparing the companies who were having very weak margins, very weak financing, and then when a difficult market happens, those companies suffer.
Yes. Thank you, Tomi, and good luck for the rest of the year.
Thank you, Pauli.